So everyone talks about property investment and everything that goes right, the money they're making, the growth, the capital growth, how much profit they made when they sold it. But what about when everything goes wrong? When somebody trashes the property, when you're having to evict a tenant, when somebody's not paying their rent, or there's a massive leak, fire, or the thunders come down and destroy the property. Okay, so not that dramatic, but something a little bit less sexy in this video that I want to cover is something that we don't really want to think about, but everything we need to talk about, and that is landlord and property insurance for your property to protect the downside. Before we jump in, my name's Jamie York. I'm a property investor, have been for the better part of a decade right now, and I'm bringing videos to you 3 times a week, every Monday, Wednesday, and Friday to help you develop in your property investment journey. And if you're interested in that, make sure to hit the subscribe button and the notification bell. And of course, if you get any value from this video, it would help immensely if you just lightly tap the like button, and helps me push it out for the YouTube algorithm and get in front of more people like you. So I've written up on the board here a list of acronyms and insurances that you may or may not want to consider for your property investment. So let's jump straight in. So the first one is your LLI. This is actually something a lot of people don't think about, which is your landlord liability insurance. So liability, messed it up already. Liability insurance. So this is all about claims from the tenant or somebody that goes on the property. Okay, so it's not actually to do with the property and protection of the property itself. It's actually if something goes wrong. So for example, it could be a stray wire or faulty electrics or something like that. It's one of those things that actually is very rare anyone will claim on this, but it actually only costs a few quid a month and protects you for millions of pounds worth of damages. And what you need to think of is kind of like car insurance. If you do something that causes a crash and somebody gets whiplash, this is the sort of claim that's going to go against you in the property world. So protecting yourself against getting sued against claims. The next one is one of the biggest one, LBI, which is landlord buildings insurance. So buildings insurance, not to be confused with the next one, which I'll go through in a second. This is the protection of the building. And I'm going to give you some quick tips around this at the end and fire through them. But if you are the freeholder of the property, i.e. you are buying a freehold property, you need to protect the building. So if anything goes wrong with the building, cracks, damages from fire, flooding, anything like that, that is going to protect the building's insurance of the actual frame of the building that you own. Not to be confused with landlord contents insurance. Now, contents insurance is what's inside the property, okay? Now, you may or may not want to think about this. In the good old days, probably about 5-6 years ago now, there was a tax change, okay? And what this meant is it's more tax beneficial. It's called Section 24 to have the property in a limited company. Before all of those changes came into play, a majority of people owned most of, if not all of their portfolio in their personal name. And there used to be something where there was a tax benefit where if you had a furnished property, the depreciation of that could be written off, okay? I can't remember what it was. I think it was 10% of your profits could be written off to go against your furnishings. And it's kind of like mileage, right? You get 45 pence a mile, but it doesn't cost you anywhere near that in depreciation and money. It's just what you get to write off, okay? But since then, it doesn't really happen. So it really is against your white goods and things like that. And if you've got furnishings, so for most of you on a buy to let, you probably won't consider it, or a lower amount, but definitely if you've got a HMO, a house of multiple occupancy, or of course an Airbnb, holiday let, service accommodation type thing, you're seriously going to want to consider contents insurance because it will get ruined over time. Okay, you can tell I'm getting a little bit excited about this, and let's face it, insurance is not that exciting, so I'll tone it down a little bit. LOR is a really big one. This is loss of rent insurance. Okay, so it is nothing to do with default, which is the next one I'll go into. Loss of rent insurance is when the property becomes uninhabitable. Okay, so if there's a flood, for example, or a fire in the property where you cannot physically rent this property out, maybe it's going through a full refurbishment because of that, loss of rent insurance, they will insure you against that and pay you whatever it is you would get on your monthly rent. My tip with this, and I will go through some quick fire tips at the end of this, is make sure to read the small print. Remember, insurers don't really want to pay out, and if they need to pay out, they'll get an arbitrator involved to try and find ways essentially to not pay out. Not a fact, just my opinion, but just makes sense from an insurance point of view. But loss of rent is uninhabitable. The next, and people get confused between these, is tenant default. Now, tenant default insurance is if you actually have a tenant in the property and they don't pay you money for more than 2 months. Okay, and it's pretty much all of them are more than 2 months. Consecutive months, okay? And what you can do is you can claim an insurance on that where the insurance will pay out. So it just protects you, especially if it's your first couple and you're worried about not having that liability, if you're still trying to transfer into that financial freedom section, where actually paying a few quid, and it is really a few quid, of getting that in can really be a protection. Now that we're a bit bigger and we've got portfolios, I'm not a big fan because, again, it's just such a pain in the ass getting paid in the first place by these insurers, and I've never had a great experience with them, but that's just one person's experience, right? There's hundreds of people out there that do get it and they absolutely love it, okay? But there is the difference between loss of rent and tenant default insurance. Okay, the two final ones that I want to go through is, first of all, ADI, which is accidental damage. So this is accidental damage usually caused by the tenant. Could be a glass of wine spilled on your beautiful, freshly laid carpet, or something like that. So any sort of accidental damages could be somebody had a few too many beverages and fell into a door and knocked it off its hinges. That definitely has never happened to me. Yes. And that's what the insurance would pay for, okay? So if there's any significant damages that's not going to cost you 50 quid to sort out, for example, if you've got an expensive carpet in an upscale buy-to-let or HMO or service accommodation, somebody spills red wine on it in the middle of the thing, that's not a quick fix. You need to rip those carpets up, probably relay it, and hopefully claim back some charges for the person that caused the damages. But in the meantime, accidental damage insurance is really going to help against that. The final one is legal expenses, and this is a big one. This is something I would recommend, okay? So it depends on the areas you're in, but especially if you're in lower demographic, and I know it's bad to blanket or tar everyone with the same brush, but you know, stereotypes come for a reason, and I'm not saying everyone. You want to do your tenant checks on this, but in lower demographic areas, you do typically have to evict more people through not paying their rent. And a lot of people go, yeah, it takes a few months to evict a tenant. No, it doesn't. It can take up to a year. It can take a lot longer, especially with things like citizens advice, where they can get advice on basically how to game the system. Not a fan, by the way, of that. But they do it a lot, okay? So it can take a long time to evict somebody, and legal expense usually, and by usually I mean like 95+% of the time, will cover you up to £50,000 of damages and legal expenses per case going through. So i.e. per property going through at any one time. Definitely worthwhile having per property, I think, for the risk exposure on that. Okay, so I'm going to do a quick run through all of these. Let me know if you think I've missed any. I think this goes above and beyond what everyone's looking at. Most of the time, what you're definitely going to be looking at is your buildings insurance, contents insurance if you've got something in there, and then you might chuck in a few more as you're building up. So you've got the landlord liability, which is really just covering you as a landlord. Buildings insurance, which is the fabric of the building if you own the freehold. Contents insurance, which is what's inside the property. Loss of rent, which is if the property is uninhabitable. It's not anything to do with the tenant. Loss of rent is if the property is uninhabitable. Tenant default is if the tenant doesn't pay for 2 months consecutively, and it is usually always 2 months. Accidental damage, glass of wine, falling in, getting drunk, everything to do with getting drunk basically, or smoking usually, and legal expenses to one if you get sued for any reason, and if you need to take anyone to court or take anyone to court. So I'm getting quick fire tips at you that you should write down, maybe watch this bit again, but in the meantime, whilst I'm surging through them, make sure to smash the subscribe button and the notification bell, and if you've got value from this video, make sure to tap the like button so I can help this video reach more people like you. Top tip number 1, get a specialized investment insurance broker for this. We use somebody called Andrew Ball. If you let me know in the comments, I'm happy to refer you over. I don't get paid anything for doing that. I just think he's insane at what he does. And he's somebody that can do everything in one place. Don't go to a mortgage broker, because whilst they will sort it out for you, it's a bit of a sideline. They don't specialize in it at all. So get an investment insurance broker. Andrew Ball is absolutely brilliant. Number 2 is when you get to around 4 properties, it's worth getting a portfolio insurance, okay? So 1, it's a bit cheaper, but that's not really the reason. It just makes it a lot easier. So as you're building your portfolio, all you need to do is go, here's the property, here's the value of the property, is it freehold or leasehold, and then they sort out the rest. Same as when you sell a property, it's just taken off and they increase or decrease the price as you're going forward. Makes it a lot more streamlined. Number 3 is make sure the property is insurable in the first place, especially if you're buying cash, okay? So if there's been fires in the area or extreme flood risk or other issues, you need to make sure you can actually get insurance on there. Now, you should have your solicitor stop you from buying, because legally you need to have insurance to buy a property in the UK, but have to and reality is a big difference, especially if you're buying cash and quick. Quickest purchase we've ever made is in 2 days. We still made sure we've got our insurance on that, but here's the problem. If you don't get insurance and you're intending on refinancing it, number 1, you're going to have massive issues getting a mortgage on it, and 2, if you do manage to get a mortgage and you manage to slip up getting insurance, which also happens by the way, it invalidates the rest of your mortgage terms, which means that if they ever spotted that, they could just pull it immediately and make you bankrupt. So make sure you've got your insurance in place. Number 4 is the property vacant or tenanted, and the different terms on the insurances will allow for either, not both, okay? So if you are buying a buy-to-let property and you're saying it's tenanted, if the property is vacant for more than 90 days, which isn't that long, think about it when you're refurbishing a property and getting it in, it invalidates your insurance, all of them. All of them. So if you have insurance for a tenanted property and it is vacant for 91 days and on the 91st day something terrible happens, you do not have insurance in there. Remember, insurance have arbiters to find out whether you've broken any rules so they don't have to pay out. So just be savvy with this. If the property is vacant for more than a month, I'd start looking into making sure the policy's changed over. It really cost a couple of quid, okay? It's just the time of doing it, which is why I like an investment broker and portfolio insurance in the first place. But don't get caught out. We've stepped over that line before and almost got burned. Please do not learn from this big mistake. Number 5 is leaseholds. Remember, it's the freeholder that actually has to have buildings insurance. Buildings insurance, the terms are on the fabric of the building. What this means is the outside of the building, okay? So it's the freeholder of the property that has rights over that. So if you buy a flat, it is almost definitely a leasehold. What that means is you don't have to get buildings insurance because you don't own the rights or have to insure any of the building. The freeholder of the flats has to pay for that. That being said, make sure you check that the freeholder has the right insurance in place, because if they're void, it's not really your problem, but it does become your problem if they can't pay out. That's obviously going to affect you. So leaseholders, you don't need buildings insurance, but your freeholder does. Make sure they've got it in place. It needs to be a legal requirement for them, but it doesn't stop you buying yours, and it can invalidate some insurances. So you need to look out for that one. And number 6, quick tip, and the biggest one of all, make sure to subscribe to this YouTube channel if you're interested in finding out more about property investment. Hit the notification bell if you want to be the first person that's notified. And of course, if you got value from this video, make sure to smash the like button and let me know if I missed any and what you thought of this video in the comments. I'll see you in the next video.